Welcome, I'm Paul Hunt, Senior Journalist at Aspermont Limited, and this is a special edition in-depth interview for Energy News. In this episode, we follow up on the progress of one of Australia's most exciting oil and gas plays. Empire Energy is an ASX-listed oil and gas explorer trading under the ticker EEG. The Australian company is one of the first movers in the Beetaloo and McArthur Basins in the Northern Territory. Earlier this year, we spoke to Empire Energy Managing Director Alex Underwood. At the time, Empire had not yet drilled its first exploration well in the Beetaloo Basin of the Northern Territory, but we canvassed the project and we looked at the potential of the well and the resource it was targeting. In this edition, we speak again to Alex Underwood about the progress made so far as Empire announces it has reached a total depth at its Carpentaria 1 exploration well and on its way has hit more than just gas. Good morning, Alex. Welcome to the program.
Hi, Paul. Great to see you.
Last we spoke, Empire had not yet drilled its well. Now you've reached a total depth of 1,916 metres. It's been an exciting journey. Preliminary results have been, quite frankly, astounding. Tell us about the results.
Yeah, I mean, this is a real game changer for our company and the entire basin. So, this is our first well in the Beetaloo Basin. We carried out a seismic program about 12 months ago, which showed us that these shales were extending into our tenement from the neighbouring Santos tenement. And we've carried out a successful drilling program over recent weeks. And what has really surprised and excited us is that these shales, while they came in shallower than we had anticipated, they've remained very thick into our tenement. The total Valkyrie formation is nearly 1,000 metres thick in the Carpentaria 1 well location. And what has really excited us is that this is the first well in the basin that has encountered liquids-rich gas. All other wells targeting the Valkyrie to date were encountered dry gas. Origin actually theorised that there was this liquids-rich window in the basin some years ago, and now we've proved it. So it's a very exciting development for us and the whole basin.
Hitting liquids when you're looking for gas, it's an exciting moment for Empire Energy. And I remember seeing your share price move on that announcement. Exactly what do you mean by liquids? What does that point to?
Yeah, so basically all oil and gas reservoirs either contain dry gas, i.e. methane. That tends to be typical, say, in the coal seam methane fields of Queensland. Or they can contain oil. But in between oil and dry gas are what's called liquid hydrocarbons. So these are longer chain, heavier hydrocarbons than gas, such as butane, propane, and pentane. Some of those heavier ends are often referred to in the US context as condensates. And what's exciting about this is that those heavier end hydrocarbons tend to attract higher market prices than dry gas, and so therefore offer the potential to enhance the economics of our activities.
Several years ago, and the Beetaloo and McArthur weren't really expected to hold the resources that you believe could be there, and to some extent have proved already. For a long time, it was generally accepted that the Beetaloo and these shales were too geologically old to produce or hold gas or petroleum resources and liquids. You've proved that wrong, haven't you?
Yeah, I mean, I don't come from a geological background, but I find the geology absolutely fascinating. And this basin is a very special basin. These are some of the oldest source rocks in the world, around 1.4 billion years old. Most oil and gas accumulations around the world come from rocks that are around 300 million years old. So they are very old compared to normal rocks. The common wisdom in the industry for a long time was that these rocks were too old and that they either didn't contain hydrocarbons or that they'd been overcooked, which means the temperatures of the rocks get too high and it ultimately becomes carbon dioxide sitting in the rocks. due to some fortunate circumstances over the last 1.4 billion years, these rocks have stayed in place, and they've gone up to just the right temperature to become gas, or in our case, liquids-rich gas, and they've stayed there stably for a very long time. So really exciting developments.
This well, Carpentaria 1 was targeting, or two targets. There was the Velcri, as you mentioned, and 1,000 metres thick, which is incredible and not something that I don't think we've seen onshore Australia before. Can you give us a bit more context around these two targets and exactly what you found?
Yeah, sure. So we were expecting that the Kyalla shale would come in at about 1,200 metres depth. That was a secondary target with a relatively small resource assessed. And then the Velcri, a much larger target, we were anticipating between about 2,200 and 2,800 metres. In fact, it's all a lot shallower than we had anticipated, but pleasingly, it's actually stayed thick in the Velcri. So we did not encounter the Kyalla shale, which was our secondary target, but we have encountered the Velcri. And as you mentioned, it's incredibly thick. I would stress that not all of that 1,000 metres of thickness is ultimately going to be pay, but we're already seeing from our results, which we recently announced to the ASX, that within the middle Velcri shale, which looks to be the most promising, there are multiple zones within that are around 50 metres of net thickness each. So we have the middle Velcri B, the middle Velcri A, the middle Velcri C, and also a zone that is really only entering prominence now, which sits between the A and the B. So, across those zones, that is several hundred metres of net thickness that we can pursue. And if you go back to the US shale context, there is a lot more resource that we can look at here compared to, say, the Marcellus shale, where typically they just have one zone of 30 to 50 metres to pursue. We've got these multiple stacked pays that we can pursue.
Let's jump back to liquids for a moment, because this is obviously a huge development for Empire. I mean, as you said, it's often referred to as condensate, but it really does change the financial and commercial size of your asset. Can you explain to us how the liquids-rich gas is going to be more valuable than the dry gas?
Yeah, sure. So again, if I go back to the US context, where the vast majority of shale development has occurred globally, there are a number of basins across the US, such as the Marcellus, and also others that are known to Australian investors, such as the Eagle Ford Shale in South Texas, that have a dry gas window, but then they also have what they call a wet gas window in the US, which is the combination of dry gas and liquids, and then ultimately an oil window as well. The US experience shows that dry gas tends to move quite easily through these rocks once they're hydraulically stimulated, compared to oil, because oil's more viscous, but dry gas attracts lower market prices. And so the sweet spot in some of these plays, such as the Eagle Ford, has actually been that wet gas transition window in between, where you get the ability of the gas in the rock to really move the hydrocarbons to surface, but then the liquids enhancing, the economics of development. And it can have quite a substantial impact on internal rates of return, because the cost of drilling a well and hydraulically stimulating it for dry gas or liquids-rich gas is essentially the same, and yet you can strip off these higher value hydrocarbons from the gas stream, sell the gas as you would have otherwise, and then achieve higher market prices for those liquids. And this is an exciting development for us as a smaller company, because it allows us greater optionality around early commercialisation options.
Yeah.
We don't just have to put dry gas into a pipeline. We can look at ways to strip off those liquids, and that really increases our optionality around early cash flow generation and how we'll look to appraise and develop this project in the early days.
The fact that the target was shallower than you initially anticipated, does that play much of a role in this?
Yeah, so again, go back to the US shale experience because that's where all the data is on a global perspective. Shale formations across the US can economically produce from very shallow depths right up to quite substantial depths. There are some trade-offs in this. Typically, there are a number of factors that go into the cost of drilling and completing a well. A major cost in that is actually getting to the target formation through the vertical drilling phase before you go horizontal and carry out your hydraulic stimulation job. And that impacts cost. There is potentially some trade-off in terms of the pressure regime. So typically, the deeper you get, you do tend to get a bit more pressure and therefore potentially higher flow rates. But, looking at a lot of plays across the US with very similar characteristics to what we've encountered in this well, we think that there's definitely a potential for economic development in the depths we're in. And that's what we look forward to demonstrating in the year ahead with our appraisal program that we can now, go ahead with on the back of this result.
It's a great discovery. Before we get to the appraisal side of it, I would like to jump back to Netherland, Sewell Associates, who gave you a 2C resource of, I think it was 13.7 trillion cubic feet. Can you put that into perspective for us?
Yeah, sure. So it was about 13.5 trillion cubic feet of gas as the best estimate recoverable. Best estimate is akin to a P50 type number. I should stress these are prospective resources. This is not proved and probable reserves, for when your listeners are listening to this podcast.
Still have a bit more work to do.
yeah, just a little bit. That's across a massive area that extends right up through East Arnhem Land. We have around 14 million acres of land under lease. Of that 13.5 trillion cubic feet of gas assessed, around 2.3 trillion cubic feet was attributed to this area in which we've just drilled, a tenement called EP187, and focusing on the Velkerri Shale. So this is only a subset of that enormous resource inventory. That it's early days in terms of what the implications of this drilling program may mean for those resource assessments. But one thing we can say definitively is that, there will be changes because Netherland, Sewell Associates had assumed that this would be dry gas in this area. And so that was 2.3 trillion cubic feet of dry gas. Clearly, now that we've encountered the shales somewhat thicker than we had anticipated, and also with the presence of liquids, we anticipate that may have material impacts on the resource assessment. I don't want to say what that may be yet because we are only in the early days of carrying out our technical analysis of these results, but it will certainly have an impact.
You began drilling, I think it was about a month ago. It was in September using the Schlumberger Land Rig 183. You looking to the future now. You've engaged a Texan reservoir engineering firm. What was the choice behind that?
Yeah, so although we're a small company, this is a frontier basin, and we are making decisions affecting massive amounts of hydrocarbons potentially in the future, and we believe that it's critically important for us to use world best practice in terms of the expertise that we rely upon for all of our activities. So, one of the reasons we chose Schlumberger to carry out this job is that, first of all, the 183 rig is a relatively big rig. It's a double drive rig, which meant that if we had any unexpected drilling conditions that we would be able to encounter them with that big rig. As it played out, our drilling conditions are actually very good, which was excellent. Another reason we use that rig and that crew is that it's a crew that's worked together for many years. They have an excellent health and safety record and an excellent operational record. And we just knew that for this program, we couldn't afford to have any mistakes, and they did an excellent job. In terms of WD Von Gonten and Co., who are carrying out some of our analysis, they are not a name that's very well known in Australia, but in the US, they are really the gold standard in terms of analysing shale. So they assisted us in the collection of our log data. They were actually in real time in Houston communicating with the rig to ensure that the quality of data collected was very high resolution. And then also a critical role that they will play will be in the analysis of core that we've taken. So we've taken 50 core samples across multiple windows of the Middle Velkerri Shale, and we're going to send that core over to the lab in Houston. I've been to that lab before, and it's a really exciting place to go because they have an unbelievable array of world-leading technology. They've analysed shale basins all across the US and even beyond the US. They've done a lot of analysis of this basin and other basins around the world. And we formed the view that having that world-best technical analysis to allow us to really understand these rocks early was critical, so that as we take every step along the way on the appraisal, we've got the best quality advice to make sure that we can really maximise our results at each step along the way.
Well, let's take a look at the future now. I mean, you did mention this appraisal campaign going forward. What does that look like? I mean, obviously you want to get working over the next quarter, I would assume, the quarter after that, at least in the first half of next year?
Absolutely. So the first thing I would stress is that even in this one fault block where we have encountered these liquids-rich gas, we're covering a massive area. I mean, this is a 40,000 acre fault block. If that was located in West Texas, somebody would be putting hundreds of wells on it within a few years. So this is a big area. We're only just scratching the surface of this area. We do have 2D seismic coverage over this area, and now our well penetration. We see a critical next step as undertaking hydraulic stimulation and carrying out some early flow tests, very similar to what Santos has just done with their Tanamarini 1 well, which was just down the road from where we are. The point behind that vertical hydraulic stimulation is that you open up around 4 to 5 stages across the Velkerri A, B and C, and also this intra-AB zone. And then that allows you to find out some critical information. One, what sort of flow rate are you getting from each of those zones? But then also, what is the proportion of gas versus liquids in each of those zones? Because what that will allow us to do is really optimise where we put our horizontal well bores and carry out multiple stimulation stages in future. And it will also allow us, in the meantime, to start progressing prospective resources through to contingent resources. Ultimately, down the track, we would look to convert them to proved and probable reserves.
Yeah.
But flowing gas to surface is where you can move to contingent, and that's a really important de-risking step along the path.
Will you be looking to drill another well over the next year or so?
It's too early to say. What we are doing is we are doing early planning to ensure that we have the greatest operational optionality at all times. So I'll be heading out to meet with the traditional owners of this area quite soon, which I'm really looking forward to doing. It's been too long between meetings because of COVID-19 related shutdowns, but I'm really looking forward to getting out on country and meeting with the traditional owners again and talking to them about our plans going forward. Other plans that may eventuate over time would involve potentially some more seismic acquisition to further delineate this area we're in. We've already got a pretty good sense of what the formations are like in this area, given that we now have a wellbore to tie to the seismic data.
Yeah.
But some further seismic delineation would be good. And then also we're considering, additional drilling locations within this block to allow us to further delineate the resource across the block.
You did mention a few moments ago Santos's Tanamarini 1 well. Can you tell? Well, Origin is also out there drilling too with its joint venture partner Falcon, but you're out there alone at the moment. Can you tell me what their results have told you about this region that you're playing in? I mean, you're the only three companies out there, and you're one of the first to sink a well that's come with these amazing results and hit liquids. But what can you tell? Well, what have you found out from other companies' results?
Yeah, sure. I should mention there are other companies active in this basin, but certainly there are three companies that are actively in the field this year. Um, the, the results that Santos have generated quite recently are extremely encouraging. So they carried out a vertical frac in their Tanumbirini 1 well. The similarities in terms of the thicknesses of the Velkerri shale in our tenement and theirs are unbelievable. I mean, it's highly consistent across those areas. The key difference being that they are a lot deeper than we are and more dry gas prone. But their results are highly encouraging. So they carried out the vertical stimulation job late last year. They did an initial test, I think it was about 129 days, and that had results that Santos reported as exceeding expectations. I think from memory, they came on at around 1.2 million cubic feet a day and then, settled down from there, but had a very, very low decline, which is encouraging that you're starting to get those stable rates. Then as a result of COVID, they shut in the well under the stay-at-home orders. Typically when you shut in a well, that can give you some further interesting information around the way that it's going to respond when you reopen it. And as they've announced just in the last week or two, the latest round of flow testing from that same job have substantially exceeded their expectations. They announced that the initial production rate was around 10 million cubic feet a day. Their joint venture partner has put out a press release saying that over the first 90 hours, they got about 2.3 million cubic feet a day. And then Santos has said that over the first 9 days, they've achieved 1.5 million cubic feet a day. And that's highly encouraging because it's important to remember this is just a vertical frac with a few frac stages.
Yeah.
Once they go horizontal, they're going to be doing a lot more than 4 stages. In the US, typically you do 20, 30 frac stages. And while it's not a directly linear relationship between the number of frac stages in a vertical and the flow rates that you'll get from proportionately more frac stages in a horizontal, it's a fairly linear relationship. And so, if they can drill horizontal wells as they're planning to do next year and, get good frac jobs away and clean up those wells and get them flowing, I think we could see pretty interesting results next year. And, again, going back to my experience in the US, I financed a number of US shale plays when I was at Macquarie Bank, and it's very well known in the industry that these shales contain huge volumes of gas. The real step change event tends to be when somebody can achieve a commercial flow rate, because if you can get a commercial flow rate, it changes the investor mindset to one of more of a manufacturing process, and substantial capital tends to flow behind it. So very encouraging results from Santos, and I'm very pleased for them.
The Beetaloo is obviously a hot spot for discussion at the moment. I noted that Federal Energy Minister Angus Taylor went down and checked out the rig and your well site. He's obviously very bullish about your project in particular. What does he hope will come out of your project?
Yeah, so I mean, we were obviously delighted to be given the opportunity to host senior politicians on our drill site. I when I've met with senior politicians, I do remind them of the US shale experience, where it was smaller companies that had that pioneering spirit of breaking these basins open and getting them up and running, and they've certainly heard us in that. I note that Prime Minister Morrison has put out his gas-fired recovery plan. He's got 5 strategic basins that he sees as having the potential to increase the supply of gas in Australia's domestic market and put downward pressure on energy prices for households and help rebuild our manufacturing sector. And, we were delighted that the Beetaloo has been selected as the first of those 5 basins as a priority target for acceleration of production. We've got really strong support for this industry at the federal government level, but also critically, really strong bipartisan support in the Northern Territory now. So there was a pretty controversial election that just happened. The Labor Party and the Country Liberal Party went into that election saying that they supported this industry as long as it's well regulated to ensure that the environment is protected. There was a third outlier party, the Territory Alliance, who had been cautiously supportive of our industry as early as January, but for whatever reason, they decided to change their mind at the last minute and say they were against the industry. We were really pleased that the people of the Northern Territory clearly voted in support of strong economic development and job creation, because the Northern Territory really needs economic development right now. They've gone through a really hard time. With COVID, it's just hit them even harder. And, it was really pleasing to see that the people of the Northern Territory have really got behind this industry. Not everyone's supportive. There are people concerned about the environment, and we're working very hard to explain to people that we are responsible and really will protect the local environment. But, there's a really strong pathway here now at both the federal and territory levels for this industry to really now get off the ground and get moving and start contributing to Australia's economy and affordable energy supply.
Well, I guess that leads straight into a question, which is what's going to happen with your resources? I mean, if you strike it rich, it certainly looks that way from the preliminary results. Will this gas be going to, a manufacturing hub in the Northern Territory? Will it be exported? Will it be piped to the East Coast market?
I think there's an opportunity for all of those things to happen, and I am genuine about that. So the first point I would make is that Australia's East Coast is facing major potential gas shortfalls in the next 4 to 5 years. The fact that we're talking about LNG import terminals on Australia's East Coast, just down the road from one of the world's major LNG export hubs, tells you we've got a bit of a problem in this country about gas supply. The Bass Strait fields are declining. There have been significant restrictions on onshore development in New South Wales and Victoria, which are finally being lifted somewhat. And also the Northern Gas Pipeline now connects Tennant Creek to Mount Isa. So gas can travel from these fields to the East Coast. The Northern Territory government has put in place a 5-point plan for, the ensuring that this bounty that they have can really provide sustainable economic development for the people of the Northern Territory for decades to come. So, they're looking at ways to attract gas manufacturing to Darwin. A lot of people in Australia don't realise that Darwin is already a major oil and gas hub. There are 2 LNG export terminals there. One is the Darwin LNG project, which has been sending gas to Asia for a number of years. That's operated by Santos now, having bought out ConocoPhillips for about $1.4 billion just last year. The Ichthys LNG project was developed by Japan's INPEX and France's Total, around $40 billion of capital expenditure. It's already a major LNG export hub, and the Northern Territory government has the foresight to recognise that it can really grow from this starting point they have of LNG export through further LNG export, but also adding value to these molecules in Australia, which can help manufacturing and real job creation in Australia. So, the size of this resource really is big enough for everyone who needs it to have a piece of the pie, if we can get those commercial flow rates from these wells. So in the industry, that's what we're all super focused on right now. But if we can hit those economic hurdles, there'll be plenty of gas for the Northern Territory, plenty of gas to support LNG export, and also gas to support Australia's east coast.
You mentioned Santos taking over ConocoPhillips's assets in the Northern Territory. It does remind me, I guess, of a large condensate discovery that was made in 2018, and I'm talking about an offshore discovery, offshore Western Australia, a long way away from where Empire Energy is in the Beetaloo. But we saw Quadrant, a company called Quadrant, which was private, and its joint venture partner, Carnarvon Petroleum, make a giant discovery of condensate and liquids-rich gas in offshore Western Australia. You've just struck the Valkyrie Shale, 1,000 metres. You've got liquids-rich gas. Is there a chance that there could be a takeover in the future?
Oh, look, I never say never. We're not running this company to be taken over. We see enormous value in our assets, and the company wants to. We really want to build something real here. We see enormous potential, and we really want to. We want to move into commercial production and build from there. Ultimately, if somebody wants to take us over, that's a decision for the shareholders. But from my position as the managing director, I see an enormous amount of upside from here, and I certainly wouldn't be looking to flip out too soon, because we're really only just getting started on this journey.
Well, that's it. I guess explorers in the Eagleford and some of these other Texan basins and onshore shale assets in the US, when they first struck gas and struck oil, many of them went through a transformational change and ended up major companies. That's an opportunity, obviously, for Empire to grow itself.
Yeah, I mean, it's an aspiration. I mean, obviously, it's very early days. We've got to walk before we run. We think very carefully about strategy within this company and making sure that every dollar of shareholders' funds is very carefully invested. There are lots of commercialisation options for our product here, but we do have a process to follow here to appraise this discovery and start working out the economics of future development, and then moving forward from there. So, we're just focused on what we can control right now. There is a lot of opportunity going forward, but we've just got to keep taking those de-risking steps along the way to make sure that we can maximise our shareholders' value.
My guest is Empire Energy Managing Director Alex Underwood. Empire is a gas explorer in the Northern Territory's Beetaloo and McArthur Basins. The company is one of the first movers in the Frontier Basin region and recently drilled its Carpentaria 1 exploration well to total depth, and as we've heard, with astonishing results. Alex, when we look at if we look at just yesterday or just earlier this year, the Morrison government did flag a potential gas reservation policy. Do you think that's needed?
I understand that Australia needs to make sure that we have enough gas for our own population before we export gas. I fully understand that. It's only fair that Australians should enjoy affordable energy prices. I think there are multiple ways to improve energy prices, and I think a key one of them is to do whatever you can to increase supply. And I think the federal government really does understand that. So removing regulatory barriers, making the ease of doing business easier, and encouraging further investment. And I think that's really happening well. I think also the federal government understands with respect to reservation, that it's really important that, you don't kill the goose before it lays any eggs. So, they do understand that the costs of this industry are high, that in this industry we take a lot of risk to discover resources. And they do understand that if you put unreasonable restrictions on what you can do with that product, then, if you bring the price down too much, then no one will develop it. So, I think this is a classic example where balance is required. I think that sensible decisions can be made to ensure that the industry flourishes, while Australians do get a fair allocation of Australia's mineral wealth.
Alex, one last question for you, and that is, taking a look at your own financials at the moment, how stable are you? And obviously, the last 12 months have seen an unprecedented economic shift for Australia. You, as a company, though, are fairly stable. Can you walk us through where you are currently?
Yeah, sure. So when I started on this journey with Empire Energy, our balance sheet was a bit of a mess, to be perfectly honest. We had less than $1 million cash in the bank. We had $38 million of debt, and that was really supported against around $4 million of EBITDA against our US assets. So we were heavily over-levered. We had very poor access to capital. And before we spent any money on our Northern Territory exploration programs, the first thing we had to do was get the balance sheet in order. So, we came to an arrangement with our lenders, Macquarie Bank, who are also our second largest shareholder and highly supportive, whereby they converted a little bit of that debt to equity. That allowed us to raise some more money and get the debt down a bit more. That allowed us to sell off some of our US assets, which brought the debt right down. We've reduced debt by well over 80% in the last 2 years, while a lot of US oil and gas companies are going through bankruptcy, and I'm talking hundreds and hundreds of companies. So, we've got the debt right down, and, we have really strong support from our shareholders. So, just in the last year or so, we've done placements at 40 cents a share. We raised $12 million. That was before COVID came and really smashed global markets. We did go through a downturn with everyone else, but we were able to.
That was the whole energy sector, wasn't it?
Yeah, I mean, I remember staying up late one night and watching oil go to negative $40 a barrel, and I don't think we'll ever see that in our lifetimes again. Well, I certainly hope not. Anyway, gas got down to 25-year lows in Q2. The energy markets went through major dislocation, but we went into that downturn pretty well positioned with our debt under control and cash balances improved. And so that allowed us to think strategically about what to do with our Northern Territory assets. We canvassed the views of a lot of shareholders saying, the world's going through a pretty tough time. Should we keep going? Should we pause? The resounding view of our shareholders was, let's just keep momentum going with this program. And because our balance sheet was in a strengthened position, we were able to do that. More recently, we've seen really strong support from the capital markets. So we did a $10 million placement just about 6 weeks ago at 30 cents a share. That was done at a pretty tight discount to the prevailing share price. We got very, very substantial over demand from the market to participate in that raise. And also, really pleasingly, a number of our shareholders held options that were issued in conjunction with a capital raising 2 years earlier. And we saw a very high exercise rate on those options, which brought in another $8.1 million. $1.6 million of that came from directors of the company, including me. So, we've put in over $6 million of our own money over the last 2.5 years. Where we stand now is that at the conclusion of this drilling program, where we've carried out all the work, we expect to have around $14 to $15 million cash left in the bank at the end of that program. And that puts us in a really strong position. It allows us to to think strategically about what to do next. We don't have to go racing back to the markets to carry out our hydraulic stimulation, for example.
Yeah.
And so we're in a really good position and we can move forward.
Alex Underwood, thank you for your time.
Thank you very much. Great to talk. Cheers.
Energy News is Australasia's most in-depth and comprehensive news service for oil and gas, hydrogen and renewables. You can find out more about our region's energy markets, the operations and policy changes happening, along with our stories covering law, technology and workforce changes at energynewsbulletin.net. This podcast was produced by Aspermont Limited, News for Business.